trade here, when you're starting to see this trade here, you can obviously recognize that the dealers went up as the smart money started to go down. In other words, there's a buyer coming in this area here that the dealers are recognizing as smart money. So when I see that the dealers have now recognized this area as smart money, my job obviously is to try and buy it at a discount if I can. My job is to try and buy it at a discount. So all we're doing is we're going to see if it comes into a discount location. As it comes into a discount location, I'm going to start bidding 34s and 35s for this bit of business here. Now, obviously, I'm going to check to see if I like it, of course. That's going to be another big question. But I'm going to start bidding 34s and 35s. And then obviously what happens is we get this brilliant takeaway from that trade, 34, 35 bid. We take out the 950s without any real trouble. And then we see the next thing happening here. Now look at this one. Again, we'll go into the right-hand edge. So you'll see on the very far right-hand edge here, you can see that the deal book is dropping off in line with the smart money starting to rip higher, which means that there is a smart money seller that the dealers recognize coming in off the 50, isn't there? The dealers already now recognize that there is a strong smart money seller coming in here. My job now is to try and join the smart money without paying retail prices for it. The problem we've always had in the past is that you recognize smart money after you see the smart money's already played the market move. Otherwise, you're simply fading into perhaps a never-ending bottom edge or top edge. What we're trying to do here now is to give you a way of being able to see the smart money operation before it shows up in the pricing of the markets, the actual price action of the markets. And you can see that at 950, this is showing up now. This is now starting to show in this area, right? Now, again, you can check to see whether you like it or not. But obviously, when it starts to hold in that area, look how much it's now very definitely showing up here. You see it? And you can see that this is still punching higher, suggesting that there's still a real seller coming in at this 950 here. That candle's reflecting that. So I don't want to pay 946. I don't want to pay 946 to get short. I want to pay as close to 950 as I can. Possibly if it can even get a little bit above 950, I'll be 100% on board with that bit of business. So obviously what happens is that we then get another similar situation happening again here at 948s. And so long as we can get in around about the 948s and we're not this time paying 946s or 5s or 4s, I'm going to be very excited about joining in again at that point. And at this stage here, we're thinking this market's going to break at some stage. And, shortly afterwards, the market then broke 5 minutes later from when we first recognized the toxic seller coming in at that point. And that's what we're trying to spot. This is a very, very good example of how you're going to be able to use the deal book to find really good entry price areas. You can see it was already diverging at the high, but that's not a strong signal. This is a very strong signal here. The size of the move is also very relevant. And a lot of times, just like everything else, you'll see that the deal book's selling with the price selling. We're not getting ahead of the move, are we? We're not getting what we would classify as anything other than simply fair value stories. A lot of the times, the vast majority of times, in fact, that the market just gives us what we would classify as fair value. And what we're trying to do is get something other than fair value. Otherwise, we're just going to pay retail prices for retail products. Chances of us making any money are very, 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 very slim indeed. So as the price then breaks down, you can see obviously we've run out of room here. We've ran out of room, but there's a lot of sellers coming in. So it's not toxic here, is it? This is not toxic. This is simply just a market maker taking a bit of money off of this drop. This is not necessarily a buy trade. This is just a profit take location. It is not a toxic buy trade at this point here. So when you see that trade there, a great opportunity to book some money. You've sold it at 950s. You're booking some money at 928s. You've made yourself 22 points or $440 in about 8 minutes. and you're waiting for new information. And you can see that new information simply says fair value selling still in play, really. You see the market makers booked another bit of profit on the way down. They sold into this guy here. They bought into this guy here. So they sold on the way back up again. So it's quite clear that looking at the deal book, they sold during that little phase. And it's quite clear looking at the deal book that they've just bought on the drop into the bottom edge again. They just bought at that phase there. And at the moment, obviously, we're seeing perhaps a little bit of toxic buy-in coming in. So the dealer's obviously recognizing this drop here, suggesting there's a buyer in here that the dealer's a little bit worried about. So it is, of course, day swing low here from the 1 o'clock session. And you'd imagine that there's going to be plenty of buyers willing to pay day swing lows here. So you can probably suggest that the dealer's just paying very close attention to that swing low. And at the moment, that's exactly what's kind of been happening. But their overall shape is, as you can see, very, very bearish at the moment. Overall shape, very bearish. And a nice push through to the bottom edge now. So that's pretty good. Now, the market that we haven't had a good day on so far, interestingly enough, has been the bond. Well, I say we haven't had a good day. We haven't had a bad day either. She's not really had any kind of day. I've got one trade on so far. I've missed 2 trades and I've got 1. And this is all we've had so far today, is this pullback trade. Okay, so one of the things we noticed, of course, is that the Fed is still sell side, by the way. If anybody didn't notice, the Fed is still selling this. So you probably already picked that up from your Fed. This has been short now for the last, since yesterday. It's been sell side from yesterday as well. And when it drops through here, of course, that means sell side equities, predominantly sell side equities, isn't it? Predominantly sell side equities. So, so sell side equities below the Fed. So we've got a tightening marketplace, so a tighter marketplace. And the tighter marketplace suggests to me that, of course, that we would imagine, if you're looking at it from an equity standpoint, you would probably prefer to be sell-side equities. So that's also something you're aware of as a seller when you saw that sell coming in. Excuse me. So when you see this as a storyline, it's quite a powerful little piece of information to watch. Now, you'll probably notice the big volume at 5:30. The volume at 5:30 was, of course, the RBA not doing anything. The RBA not doing anything. So with the RBA not doing anything, we were left obviously looking at it saying, okay, well, that means that the bonds are now overpriced, one would imagine. Now, obviously, if you're into a day session low, that's okay. There's nothing for us to do there if it's into a day session low. But it's got a little bit of room to day session lows still to factor in, hasn't it? When I came into the London session, so I didn't take a sell trade, by the way. I was just talking about it to the guys about this sell trade here. So you're automatically going to, as a fundamental trader, you're leaning on the idea you want to be short bonds. So I came into the London session here, and I am immediately layering in loads and loads of treasuries at 14s, 15s, 16s in this little box here. Loads of treasuries. And some of us in the room, namely Reeve, he was up early enough. He was already short into the treasuries at this point. So Reeve was already taking full advantage of the RBA's little bit of nonsense, leaving rates on hold with a 95% certainty that they were going to drop by 25 basis points. So Reeve was already short, whereas I was scrambling to get short. I couldn't get short, and I missed the trade, and I didn't think there was enough value. Hindsight's a wonderful thing. I didn't think there was enough value to stay on it, to start crossing into the spread. So obviously what happened is I just never got traded. When we came into the room, I did call the bottom edge here. I says, I'm now looking at this as a bottom edge. You might remember it. I said, I'm willing to pay the break down towards the 16s here to buy into this. And you can see what happened. It never broke down towards the 16s. And again, the price just traded as excess into the bottom, and we never got a retest of the low price. It left me still with no trades in the morning session in bonds, not a single sausage. And as we come into the little top line here, I quite like the idea of staying with the Fed on this occasion. Selling back into VWAP, a wholesale price level at 16s. This looks like a good quality short sell. And the reason why it looks like a good quality short sell I mentioned a short while ago. Commodities are on a bid so far today. You look at copper prices, and when I took the short sell, copper prices had started to rally beautifully. Okay, so they've started to peel off a little bit, but that's a great start for my sell trade. When I look at gas prices, you can see gas prices when I took the sell also were ripping beautifully. They've also started to peel off as well. And when I look at oil, of course, obviously we've been playing around on oil as scalpers. Oil prices were also moving higher. I want to be short bonds. And short bonds is exactly what I was able to get into. I was able to find a way into the 16s. And you can see we've just traded the sell side FOMO trade, and we're now just trading into day session lows, and a great opportunity, just as I've been speaking, a great opportunity to bank our first profit of the day on bonds. Woo woo, thank the Lord. So great trade, lovely little outcome, finally making some monies. And I can rest easy again. I'm not as off the pace as I thought I was this morning. So that's good news, very good news. Anyway, that's where we're at just now, taking a bit of money on the bond.